Hey, Dustin Tibbits here, financial advisor with Jazz Wealth Managers. How you doing today? Tonight, I should say. Hey, we're financial advisors that go over the data. We focus on data to make sure your account grows over time. We're not one of those where you're like, you're going to invest with us, we'll put you in a mutual fund and then go play golf or do whatever we do. We don't like that. We're young. We like the idea that you can see right on our homepage what we charge, how it works, and you can see clearly that when we grow your account, we make more. We want that. You make more, we make more. That's our whole approach here instead of just goofing around with mutual funds or whatever. So hope you check us out at jazzwealth.com. We've got some data to share with you here today. Before I begin, it is the last of the old Buffalo Trace, sadly. I don't know if we're going to be able to get any more after what happened to them, but hope you'll join me with a Gatorade, a water, a wine, whatever it is you like. That is totally cool. Now, the other day, the stock market gained, the S&P gained over 2.5%. Did you notice? Probably not, right? Because we're in this hyper volatile environment where the market will gain or lose 2, 3, 4, 5% all in one day. I wanted to know, how often does that happen? Should I be excited, right? And I think you're going to be pretty interested in what you see here. So hopefully that shows up nicely for you on our chart. Here's what we did. We said, I want to know the daily distributions of the S&P 500. We took the SPY data going all the way back to 1993, which is going to be over 30 years. And we said, okay, show me how many times it gained more or lost more than 0.5%. 1%, 2%, 3%, 5%. So I just want to know how many times this happens. Well, we were in the 2.5% category. So we're going to go to this column here, and we're going to say, well, how often does that happen? Well, over the lifespan of the SPY, it's happened a total of 269 days. 3.32% of the time over a 30-year window, the S&P has gained over 2%. Only 3% of the time. So it's not very common, right? But what happened? The market goes up 2.5%, and we're like, okay, that's whatever. And it's because we're so used to this volatility right now that we think these bigger numbers are not as impactful. Now, check this out. The stock market as a whole, look down here to the bottom, we're saying the median daily return, or let's just do average, is 0.04%, meaning on a daily basis, the S&P gains 0.04%. Well, we just gained 2.5%. That seems much larger than 0.04%, right? So on average, that's what we expect. Median 0.06%. The biggest drawdown, of course, intraday, I should say, about 11%. Biggest gain, 14.5%. So we say, okay, well, we gained 2.5%. That is really odd that happened. Well, in fact, if we go down here and we look at just plot the distribution of all the returns, the market gains 0 to 0.5% most of the time, right? Here's the number of occurrences that happen, 2,130 times. The market will lose 0 to 1, well, it's technically 1 point less than 0, to minus 0.5%, 1,700 times. So the bulk of the time we're sloshing around, mostly trending higher, but in a really slow way. Come on over here. Where are we at? We're not at 2%. We're at 2.5 to 3%. 49 times did that happen in the S&P since 1993, right? So it's a big sample set of data that we're working on here. Really, really interesting when you start to think like, oh, it's a 2.5% day. I wish it would have been more. That'd have been more fun. It's whatever. No, it's not normal, right? It's just because we're in this volatile environment. Now, let's take it a step further. If the market gains 2.5%, and you can use our portal, we actually have a whole research site that you can use to see this exact data if you want. If the market gains more than 2.5%, more than 2%, I should say, sorry. What tends to happen the next day? Do we gain another 2.5%? Or do we do like next to nothing? Now, this is not currently happening, but let's go over the law of large averages here. Let's see what happens. So same data set, we're using everything exactly the same. However, over here, we're saying the average next day's return is what? So when we gain about 0.5%, the next day gains about basically 0.5%. When we gain 1% or more, it's kind of a quiet day. Look through here. It's mostly a quiet day. When, and very rarely, does the market gain more than 5%, the next day tends to be pretty interesting, right? Here's what I want to point out. We gain more than 2%. We are not expecting to have a 5% day. Is it possible? Yes. In some of these circumstances, the next day was 2.5% or 3% or whatever. In some days, the next gain, or I should say loss in this case, was over 2% to the downside. So we're looking at the average next day's return because we're not playing for one day, right? We don't really care. We're playing for the long term. And so when the market has these amazing moves in one day, it's very normal for the next day to just be kind of quiet. And again, it wasn't necessarily happening now, but I wanted to point that out. So if ever, and you're going to experience a lot of these, you see the stock market gain 2% or 3% in a day, that is an incredibly odd move. Let me go back here just for a second. For the market to gain more than 2.5% in a day puts it in the 90, it's going to be the 99th percentile. So if anything over 2.45% puts it in the 98th percentile of all occurrences. Yeah, that's odd, right? If you don't know what that means, it means it's odd. This is not something that should normally happen. So before you get yourself excited about, well, now we're going to see more and more gains, know that that is a very welcome day, right? We're happy to see a 2.5% gain, but it's also not something that is likely to continue on top of itself, right? And a lot of times what investing is just setting your expectations. If you know that something is odd, anytime, I tell clients all the time, when something is odd, we want to ask why it's odd. If everything's normal, then we want to focus on like your planning and your goals and things like that. Right now, we have a very odd market, which is why in our expense-free funds, we've been putting cash to work. Actually, we already did, so it's doing really well now. We're happy with that. But we take those opportunities to go, this market decline is quite odd. We want to participate in that. We don't want to run away from it. In fact, we stop clients from running away from it, but we go, hey, we're going to run into that mess, that chaotic fire of a mess, instead of running away, because we look at the data and go, hey, these are buying opportunities. And we don't necessarily need to be right on the exact day that it turns around. We just need that 20% discount, that 10% discount, whatever it is. So anyways, I thought that was really cool. I hope that's something that taught you a lesson there. Maybe you're looking at your 401k or IRA or whatever and going, I don't like this. I want to get out. Don't do that. Be very, very thoughtful about how you do these things. Don't be emotional. And if you find you're getting emotional and you want someone to just take over, that's what we do here at Jazz Wealth. But thank you for watching. And hopefully you'll keep us in mind, because, that's why we teach you this stuff, is so you remember the logo on the shirt and, give us a call. Move your accounts to us. What are the other advisors doing? Like, what is he doing? Did he even talk to you? Are they making videos? All right. See ya.